Hey everyone, welcome back to the show. Terry, big congrats on your call yesterday. Novo Nordisk is up over 6% today. How does that feel?
Thanks. Even a blind squirrel finds a nut sometimes. But seriously, I'm thrilled. More importantly, it's great to see Novo Nordisk finally getting the recognition it deserves. Yesterday's call wasn't luck. The market is waking up to the fundamentals.
So you see this as more than just a quick pop?
Exactly. This isn't just a headline bounce. Multiple factors came together, and today's Phase 3 trial results were the catalyst. Their oral version of Wegovy showed significant weight loss, right in line with the injectable. That's massive. It closes the gap with Eli Lilly on oral treatments and confirms what we've been saying. The oral GLP-1 race is going to be a game changer.
Did you put on a trade yesterday? If so, how did you play it?
I did. I went with an option strategy. I sold March 2026 puts at a $65 strike and collected about $11 in premium. That means I'm basically getting paid to agree to buy the stock at $65 if it drops. With that premium, my real cost basis is closer to $54 per share, a level I'm very comfortable with. If the stock goes up, I just keep the premium. It's a patient trade, built on the belief the stock is undervalued.
So your opening move is selling puts and pocketing premiums. What's next?
The good news today validates the thesis we talked about yesterday. Now I've got options, literally. With that premium sitting in my account, if the stock pulls back, and there will be volatility, I can use some of it to buy calls and ride the upside. Plus, the stock pays about a 3% dividend, which isn't bad to collect while the turnaround story plays out. Definitely one to watch.
Sounds like a solid plan. Did you catch David Tepper's CNBC interview today? He said, don't fight the Fed, keep investing. But he also warned that valuations are stretched, and if a downturn hits, funds like his can't sell billions fast enough.
Yes, I saw it. And he's right. That's how most investors feel. But here's the difference. For us, retail investors, it's easier. I'm selling calls on my positions and collecting premiums. If some get called away, that's fine. It helps me rebalance and lock in profit. Remember the saying, bulls make money, bears make money, pigs get slaughtered. The psychology of investing is powerful. People fall in love with winners and don't want to sell, but that's how you end up buying high and selling low.
At these historic highs, where do you still see value? Do you think a crash is coming?
I think the bull market keeps running unless a true black swan event hits. 10% of people own 90% of stocks, and that wealth isn't spent on consumption. It compounds. Fueled by decades of U.S. growth, innovation, and Fed policy, that money has to go somewhere. It flows into stocks, real estate, gold, crypto, pushing prices higher. This isn't 2008. Back then, banks were throwing money into risky subprime loans, basically giving mortgages to people who couldn't afford them. That capital didn't flow into productive assets. It got locked up in households and housing speculation. The wealth that was created was artificial, built on inflated home prices and leverage. And when the bubble burst, the whole system broke because those assets weren't generating real cash flow. Today is different. The money sloshing around the system is being invested in companies, businesses that generate revenue, profits, and real growth. Instead of being tied up in unproductive assets, capital is being reinvested in tech, pharma, infrastructure, and innovation. That makes the system much more resilient. And here's why I like the financials. The bigger the pool of capital, the more activity there is. More trading, more asset management, more deal-making. That's the lifeblood of firms like Goldman Sachs. They sit right at the center of this machine, managing money, trading their own book, and capturing profits at every step. Add in AI, which they're using to boost productivity and efficiency, and I think they're set up for long-term outperformance.
So Google for AI, Goldman for financials. What else?
As we talked about yesterday, Novo Nordisk and Eli Lilly are leading in weight loss drugs, and their oral pill is a real breakthrough. But pharma's tricky. It's one of the hardest sectors to trade. I'm not in medicine myself, and I don't have personal experience with GLP-1 treatments. If any doctors or patients among our listeners do, I'd love to hear your perspective in the comments.
And when your stocks get called away after selling calls, what do you do with the cash?
That's the tough part. After enjoying 25% portfolio gains, it's hard to settle for 4 to 5% in fixed income. So I park my cash in SGOV, the ultra-short Treasury ETF. I treat it as dry powder, ready for dip buys or new opportunities. SGOV works even if the Fed cuts rates, because its real value is stability and liquidity. When the market's at all-time highs, the key is safe, instantly deployable capital. The yield might fall, but the point is protecting your principal and staying flexible.
Smart, disciplined, and risk-aware. Thanks for breaking down your strategy, Terry. That's all the time we've got for today. I'm the host of Mind Over Investing. If you enjoyed this episode, make sure to like, subscribe, and drop your thoughts in the comments.
This video is for educational purposes and community discussion only. I am not a financial advisor. You are solely responsible for your own investment decisions. Always do your own research and consult a professional before investing.